Is Bitcoin's 110,000 price reassuring? Are premium, activity, and staking indicators all sending signals? Trump nods is putting GDP on the blockchain, a transparency revolution, or just a show. In order to hoard 1% of the total amount, does Metaplanet really want to become Bitcoin's wild central bank? Blue chips lose, Ethereum maintains its top position? Base soars 70%, what's the confidence? MSL lost 3 key players just 2 months after its opening. Can Zuckerberg's money really build general AI?
Thursday, August 28th, BitcoinTV English channel, Where is the Coin Chain? I'm Michael, starting with the 24-hour cryptocurrency market headlines. The latest signal is here. The Coinbase Premium Index has finally returned to positive territory. Simply put, in the US, Bitcoin's trading price is higher than on other exchanges, indicating that investors and institutions are increasing their holdings. Bitcoin has been repeatedly testing the $110,000 support level for several days, a highly intriguing trend. Coinbase has long been considered a key trading platform for North American institutions, and its premium often fluctuates ahead of the market. This recent rebound in the premium is likely a sign of institutions quietly repositioning at low levels. Adding to the macro picture, the Federal Reserve will announce its interest rate decision in September, and the market is betting on an 80% probability of a rate cut. Once implemented, a rate cut will directly benefit liquidity. Therefore, the positive premium and the expectation of a rate cut combined underscore a short-term bullish market outlook. Don't be surprised. $110,000 may very well become a temporary support point. When analyzing Bitcoin's market, don't just focus on the price. The number of active addresses is the key indicator. Historical trends have been nearly linked. A steady rise from 2010 to 2016, reaching a peak together during the 2017 bull market. A decline during the 2018 to 2019 bear market, and a new all-time high in 2020 se 2021. The market cooled in 2022, and both the price and the number of addresses fell. But things are different now. From 2023 to 2025, the number of active addresses has remained stable between 900,000 and 1 million, far exceeding the levels seen before the previous bull market. Currently, there are approximately 919,000 active addresses, and the Bitcoin price is $111,000. While the number of addresses hasn't exactly tracked the price, its sustained high level demonstrates that this isn't pure speculation, but rather support from real users. This means that any price correction is more likely to occur. If activity remains stable, the price could reach $150,000 to $200,000 in the future. However, if the number of addresses decreases, the price could fall back to $80,000 to $90,000. Therefore, while the short-term outlook is neutral, in the long term, the number of active addresses is the key to Bitcoin's bull market. The latest data shows that 36.1 million Ethereum has been staked, representing 1/3 of the circulating supply and a record high. Even more remarkable, even during the major correction expected in 2022 to 2023, the staked amount not only did not decline but actually increased, demonstrating genuine long-term conviction. The more Ethereum is staked, the less Ethereum can be traded on exchanges, naturally compressing supply. Ethereum recently climbed back to $4,500, coinciding with record-breaking staked amounts. This creates a cycle. Rising prices attract ETFs, custodians, and whales, which locks up funds again, pushing prices higher. Ethereum ETF reserves now exceed $300 billion, and even BlackRock is increasing its holdings, further positioning it as both a yield-generating asset and a foundational asset for the underlying network. Unlike Bitcoin, which is primarily driven by trading, Ethereum relies on staking and institutionalization to reduce circulating supply, making it increasingly scarce and maintaining its core position in tokenization, DeFi, and institutional finance. In the long run, This wave of pledge growth may very well be the engine of the next bull market. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the bell to join our channel and become a member. You'll receive your membership code Monday through Friday. The Silicon Valley 8, frustrated by their boss's dictatorship, collectively defected in 1957 and founded Fairchild Semiconductor, which not only ignited Silicon Valley but also gave rise to Intel and Sequoia Capital, ushering in an era of technological innovation in the United States. Now it's the turn of the Trump White House's 8 generals to shake up the crypto world. While the Biden administration's strict regulatory approach once suffocated the industry, Trump's presidency has brought a completely different approach. Crypto-friendly, even somewhat radical. The crypto-focused team he personally assembled is comprised of die-hard supporters, each one outspoken and bold. Technology and politics are becoming increasingly inseparable. The signal sent by the White House this time is more than just a political statement. It has the potential to reshape global understanding of the trustworthiness of government data.
U.S. Commerce Secretary Howard Lutnick announced at a Trump cabinet meeting that the Department of Commerce will put core economic data on a blockchain, citing, "You're the crypto president." Trump immediately approved. The pilot program will begin with GDP data, leveraging the transparency and immutability of blockchain to create a publicly verifiable data release pipeline. Future expansion is planned to include indicators such as CPI, employment and trade deficits, and even the entire government statistical system to address long-standing issues such as data delays, lack of credibility, and political interference.
The Department of Commerce is going to start issuing its statistics on the blockchain because you are the crypto president, and we are going to put out GDP on the blockchain so people can use the blockchain for data distribution, and then we're going to make that available to the entire government so all of you can do it. We're just ironing out all the details so we can do it.
Whether the project will utilize an Ethereum, Bitcoin sidechain, or a government-owned blockchain has yet to be announced. Industry insiders believe that a public blockchain will leverage mature infrastructure, while a consortium blockchain will likely be led by IT and financial giants. While details remain uncertain, regardless of the choice, this marks the first time blockchain has been positioned as a national data infrastructure. If implemented, it will enhance data credibility and serve as a model for global governance.
Don't assume Commerce Secretary Lutnick is a layman at WBE3. His firm, Cantor Fitzgerald, has a deep connection with Tether, not only safeguarding the majority of its U.S. Treasury reserves, but also spending $600 million to acquire a 5% stake. It's fair to say he's already deeply involved with stablecoins. Considering the Department of Commerce's responsibilities, it already oversees core data like the census and GDP, which are publicly accessible and transparent. Now, suddenly moving all of this data onto a blockchain, is this a major institutional upgrade, or is it just a political stunt, a way to boost awareness through a crypto-friendly stance? This is truly worth considering. The recent trend of corporate cryptocurrency hoarding has become unstoppable. Bitmine already holds 1.15 million Ethereum, worth approximately $4.9 billion, a veritable ETH treasury. SharpLink Gaming, no slouch either, has directly invested $400 million in ETH. Bitcoin, on the other hand, is even more significant, with 130 publicly listed companies globally holding significant holdings, collectively valued at $87 billion, representing 3.2% of the entire Bitcoin network. With such frenzied hoarding, Japan's Metaplanet has taken the bull by the horns and launched another major move, fearing they might miss out on the market.
Japanese investment company Metaplanet has approved a plan to raise $1.2 billion through an overseas offering, of which approximately $835 million will be used to purchase Bitcoin. The company plans to issue up to 555 million shares, increasing the outstanding shares from 722 million to approximately 1.27 billion. The offering price will be determined between September 9th and 11th, with payment to be made thereafter. This offering is intended for overseas institutional investors, is not registered under the Securities Act of 1933, and will not be publicly offered in the United States.
His vision on how a listed company can pivot and embrace Bitcoin in a way that wasn't possible in the past. And so that really gave me the inspiration to pivot out of the hotel business, which was already struggling. So there wasn't really much of a choice, but there were many directions that we could have taken. And the decision to adopt Bitcoin as our core treasury asset has been an absolute game changer for us over the past year.
Metaplanet already holds 18,991 bitcoins, worth approximately $2.1 billion, and they still think it's not enough. Of the new funding, $835 million will be used to continue buying Bitcoin, while another $440 million will be invested in a new business, selling covered call options on BTC. This effectively hoards Bitcoin while collecting rent, and it's already profitable. This is just one step in their larger strategy. They previously announced plans for 21 million and 555 million Bitcoins, with the goal of holding 210,000 Bitcoins by 2027, representing 1% of the total supply. This ambition makes them a virtual advocate for Bitcoin. With such a massive investment, Bitcoin's price is sure to surge, potentially pushing it to new highs.
With 3 hot-selling products supporting the market, is the rise of base NFT a real strength or just a flash in the pan? Sam Altman blasts poaching. How long can Meta's superintelligence lab last?
The NFT market is buzzing with competition. Ethereum remains the leader, followed by Polygon in second place, with a 30-day trading volume of $62.29 million, a 15% increase thanks to the Courtyard NFT platform. This time, Dark Horse Space has surged all the way to third place, proving that new public chains with strong technology and a vibrant ecosystem can still enter the NFT arena. Not only is Base's NFT performance impressive, but its entire ecosystem is also booming, processing 27 million transactions in 30 days and surpassing $16 billion in dApp transaction volume. The question then becomes, will this surge in popularity be short-lived?
According to DappRadar, NFT transaction volume on Ethereum's Layer 2 network, Base, surged 70% over the past 30 days, reaching $47.67 million. This performance has propelled Base to third place in the global NFT trading volume rankings, surpassing immutable ZKEVM and Solana.
Originally, when he came to me, he asked for $1 billion and 60 headcount, and he had this giant vision. I was like, usually innovation happens with small teams, right?
Constraints.
Two pizza teams, exactly.
Yeah.
Breeds innovation, so breeds creativity. So he started with like 3 to 5 people on Base chain, got that to be the number 1 L2. I'm thinking, okay, this is pretty good.
This wave of growth was mainly due to several hit series: Get Base, DX Terminal, and Base Style. The 3 together contributed approximately $25 million in transactions, accounting for more than half of the total, directly igniting the popularity of the Base network's digital collectibles market and accelerating its rise in the NFT ecosystem.
Meta is expanding its budget again. According to the latest news, capital expenditures for 2025 will start at a lower limit of $66 billion, with an upper limit of $72 billion, primarily focused on talent, computer rooms, data centers, and energy. The most talked about project is the multi-billion-dollar MSL Superintelligence Lab, originally intended to be Zuckerberg's ultimate weapon in his quest for general AI. However, just 2 months after opening, key researchers have fled, directly disrupting Mark Zuckerberg's plans. Whether Meta's ambitious plan to achieve AGI by simply piling on cash is truly viable is unclear at this point. Meta is expanding its budget again. According to the latest news, capital expenditures for 2025 will start at a lower limit of $66 billion, with an upper limit of $72 billion, primarily focused on talent, computer rooms, data centers, and energy. The most talked about project is the multi-billion-dollar MSL Superintelligence Lab, originally intended to be Zuckerberg's ultimate weapon in his quest for general AI. However, just 2 months after opening, key researchers have fled, directly disrupting Mark Zuckerberg's plans. Whether Meta's ambitious plan to achieve AGI by simply piling on cash is truly viable is unclear at this point.
Meta Superintelligence Laboratory MSL, founded in the first quarter of this year. The company experienced a core talent exodus just 2 months after opening. At least 3 prominent researchers left the company. Avi Varma and Ethan Knight returned to OpenAI, while Rishabh Agarwal, formerly of Google Brain and DeepMind, also departed.
And we're told that Zuckerberg at that time really said, okay, I need to be heavily involved. I need to go out and recruit these people myself to get the absolute best talent. And that is what he has spent his last 2 months doing, literally hosting people at his homes in Palo Alto and Lake Tahoe to try and close these deals and sign these AI experts and scientists.
It is worth noting that OpenAI CEO Sam Altman has publicly criticized Meta's aggressive poaching. It's speculated that Agarwal's long-term residency in Canada and the physical distance from the main R&D team in Menlo Park, California, may have been a key factor in his departure. This exodus of key talent undoubtedly casts a shadow over Meta's plans to advance into AGI.
Meta's MSL Superintelligence Laboratory claims to have gathered the world's smartest AI brains, but here's the problem. With too many smart people, trouble also follows. The Los Angeles Times described it as a bullshed on fire, where everyone thinks they are right, there are a lot of schools of thought, and there are constant arguments about R&D priorities. Even more embarrassing is that Meta also suspended recruitment in the AI department in early August, seemingly switching from crazy expansion to internal integration. It can save some labor cost in the short term, but without a clear decision-making mechanism, these top talents will leave at any time. Meta now wants to rely on external alliances to make up for its technical shortcomings, but the question is, can these external resources be quickly integrated into its own products? This issue still needs to be questioned.
The Wall Street Journal reports that some people are turning to ChatGPT to vent about their emotional breakdowns. OpenAI responded by announcing an upgrade to make AI more emotionally sensitive, less cold, and more human. Tether printed another $1 billion USDT today, and Circle followed suit with $250 million USDC. Over the past month, the two companies have collectively pumped out $8.75 billion, effectively becoming a crypto money printing machine. Reuters revealed that ByteDance has priced TikTok at $330 billion, but it has not yet made money in the United States. Its traffic is booming, but profitability is elusive. U.S. Treasury Secretary Benson has announced that he is currently searching for a successor to the Federal Reserve Chair and will personally meet with candidates. Simply put, the process of deciding who will helm the Federal Reserve has entered the interview phase. KuCoin, together with its Thai partners, became the world's first and only exchange to support Thailand's historic G-Token project on August 27th, taking the lead.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.